It seemed like coming into this year, you had a pretty good bullish setup for the group, right? You had Fed hiking rates, credit was no problem, earnings okay, valuations, buybacks, all in line. Stock didn't perform along those lines in terms of the bullish case. What changes next year when incrementally maybe you don't have those tailwinds?
Well, I think what we really saw in the banks and financials in general is the back half of this year, more specifically the fourth quarter. I mean, we saw a lot of green yesterday. That's nice to see, but even with the green yesterday, we're still down 20% plus fourth quarter to date for most of the big financials and big banks. I think what happened is really two things. You need banks are essentially they finance the economy, so they're kind of a proxy on the economy, and there's concerns about the economy next year. Secondly, they're the most interest rate sensitive group out there, and there's concerns about interest rates with the curve kind of coming close to flattening, or I should say inverting. I get all those concerns, and those are valid concerns. But when I looked at 2019, the correction we've seen in these stocks is as though we're going into another Great Depression or a Great Recession, right? That there's going to be a tremendous amount of downside next year. As I look to next year, all the indicators fundamentally we can look at suggest there's still going to be economic growth. Maybe not as much, but still the economic growth. So I think the correction we've seen is way out of proportion for the fundamentals. And ultimately, the stocks follow fundamentals. So I think especially early part of next year, we're going to see a lot more green in the bank space as some of these stocks kind of come back to what I think is a more normal level for what's still a pretty good economic environment.
I wonder, though, Jeff, I mean, if in the back of investors' minds, it's like, okay, fine, maybe we saw peak profitability for this cycle. We saw peak returns on equity. It really wasn't all that exciting in the broader context. We're not going to pay up for kind of looking across the valley or waiting until the cycle ends here.
Well, I think it's interesting you said we've seen peak earnings, we've seen peak ROEs. I disagree with that. We've probably seen peak growth momentum as far as the pace at which they're growing, but I fully expect banks to post more earnings last year than this year, and therefore higher ROEs. So I don't think we've really hit that point, but the stocks are trading as though we've seen peak earnings, but we've really only, in my mind, seen peak growth in earnings.
And what name or two, quickly?
I like larger cap names. I think you have a lot of advantages from being in capital markets, you know, lessening interest rate tailwinds, but still strong economy helps there. Scale matters. So I'd be looking at Citi. I'd be looking at Bank of America. I'd be looking at Morgan Stanley, even a Goldman Sachs. So you may have to suffer a little more volatility while you're waiting there.